Hi lads, this is the 2015 depreciation account. I'm going to go through it here from start to finish and make sure you know where all the numbers are coming from. It's extremely important in this question that you get all the workings done first. You must really read the question carefully. I'm going to go through what I do is I'm going to do a table in Excel with all the workings. Once you have all the workings, it's really easy to just finish off the questions to get the marks. This question is worth 60 marks, so you'd be looking to do it in about 25 minutes. There is 52 marks for the accounts, and there's 8 marks for theory at the end as well. So without further ado, let's get going. So first of all, you need to read the question really carefully. So, Euro Limited, a sportswear manufacturer, prepares its final accounts to 31st of December. The company's policy is to depreciate its machinery on a straight line basis over 10 years. Okay, so 10 years is important. Scrap value is estimated at 5% of the original cost of the machine. So what that will mean is before we work out the depreciation, we have to take 5% off of the cost. Depreciation is charged from the date of purchase to the date of sale. Calculation should be to the nearest euro. So when I'm doing this on Excel, it might give me to 2 decimal points. I'm going to round that up. Same on your calculator. So on the 1st of the 1st 2013, Euro Limited owned the following machines: number 1, number 2 and number 3. Number 1 was purchased in 2010, number 2 2011 and number 3 in 2012, and this was the cost price of each one. Okay, on the 1st of the 3rd 2013, so dates are very important, machine number 1 was ruined by a malfunction which completely destroyed the motor sensor. The insurance company paid out 25,000 and 500 was received from the sale of machinery to a scrap dealer. On the same date, a new machine, number 4, was purchased to replace number 1 at a cost of 60,000. So on the same date, 1st of the 3rd 2013. Machine number 3 had a modification carried out on its motor to increase productivity on the 1st of the 1st 2014, costing €4,000, and the depreciation on this is €475 per year. On the 1st of the 1st 2014, machine number 2 was traded in for 27,500 against a new machine, machine number 5, and this cost 55,000. The balance of the purchase price was paid immediately. It cost 2,000 to have it delivered and 400 to have it installed, so we are going to have to add those two figures onto the cost price. Okay, so basically before we start, I'm going to show you the table. We have vehicle number 1, vehicle number 2, we have vehicle number 3 which also has a modification, we have machine number 4 and machine number 5. Okay, I was calling them vehicle, machine I should have been saying. So machine number 1, 2, 3, 3 has a modification, number 4 and number 5. So we're going to work out all their depreciations, accumulated depreciation, depreciation for each year, and if we dispose of anything, we must dispose of the depreciation as well. So I'm just going to scroll down and see what are we actually asked. We are asked to do a machinery account, T account for 6 marks. We are asked to do a depreciation account, which is 32 marks, and a disposal account, which is 14 marks. And then we have a bit of theory for 8 marks. So this is how I go about the question. So first of all, this is the table that I would create. As you can see, there is a lot in this table. So down the first column in the left, I have the vehicle number. So we have vehicle 1, 2 and 3, the date they were purchased and the date they were disposed of. So vehicle 1 was purchased on the 1st of July 2010, disposed of on the 1st of the 3rd 2013. Vehicle 2, you can see 1st of the 9th 2011, disposed on 1st of the 4th 2014. Vehicle 3 was bought 1st of January 2012, was never disposed of. The modification on vehicle 3, that's why, so I've put it in here after vehicle 3, was done on the 1st of the 1st 2014. You might ask, why is there a gap there? I'll show you, I'll explain that in a second. And this is still held. Vehicle 4 was bought on the 1st of the 3rd 2013, and we still have it. Vehicle 5, 1st of the 4th 2014, we still have it. Now, I'm going to start with vehicle 1, 2 and 3 and the cost of vehicle 1, 2 and 3. So these come from the question. The cost of vehicle 1 was 50,000. The cost of vehicle 2 was 65,000. And the cost of vehicle 3 was 75,000. Okay, and I'm going to add up that figure because that is going to be our opening balance figure on the machine's T account. Okay, so 190. The modification cost 4,000. The vehicle 4 cost 60,000. And remember, vehicle 5 included the delivery and installation. So that was, looking at the question, 55,000 plus 2,000 plus 400, which gives you 57,400. So that was what everything cost. But this 190, I'm just going to put in red so that we know that's our figure. That's going to be our opening balance. Okay, I'm just going to, for my own self, I'm going to work out what would the annual depreciation be on each of these items. Now, I know this one, the modification, because I was told in the question 475. Every other one, remember, there was scrap value. So back up to the question. Depreciated on a straight line basis over 10 years, and 5% of the original cost of the machine is scrap value. So to work out the depreciation for the year, we would work out 95% and divide it by 10. So my calculation will be 50,000 multiplied by 95% or 0.95 divided by 10. So that would be depreciation for a full year would be 4,750. I'd do the same for each one of these. So it would be 65,000 multiplied by 0.95 or 95% divided by 10 years. I'd do the same again for this one, and it would be 75,000 multiplied by 95% divided by 10. Just check these figures in your calculator. 7,125 for a full year. Modification, we are told 475 a year, and I'm going to do the calculation again for number 4. So 60,000 multiplied by 95% divided by 10, and I'm going to do the same for 5. 57,400 multiplied by 95% divided by 10, 5453. Okay, if you get a different answer in your calculator, remember you round to the nearest decimal point. So for a full year's depreciation for these, that's how much that is. I'm going to show you why that's important in a second. So the first thing we're going to work out, because in the question we are asked to do you're required to show with workings the following accounts for each of the 2 years, 2013 and 2014. So that's the 2 years we're going to do, but we must get an opening balance for depreciation for 2013. So in order to do that, we need to work backwards, because we are told number 1 was bought in 2010, number 2 was bought in 2011, and number 3 was bought in 2012. So there's going to be accumulated depreciation there, which I'm going to get in this column here. So we'll start with vehicle number 1. Vehicle number 1 was bought on the 1st of the 7th, 2010. and it was disposed of because it was damaged on the 1st of the 3rd, 2013. So at the moment, I'm only dealing up to 2013. So in 2010, we purchased it on the 1st of July. So we owned the machine, for 6 months. So a full year's depreciation would be 4750. So for 2010, it's going to be 4750 divided by 12 multiplied by 6, because we had that vehicle for 6 months. Machine, I keep saying vehicle, machine. 2011, we had a full year, 4750. 2012, we had a full year, 4750. So the opening depreciation on the 1st of the 1st, 2013, accumulated depreciation, would be the 3 years added together, which is 11,875. Going to do the same for vehicle 2. So vehicle 2, machine 2 was bought on the 1st of the 9th, 2011. So in 2011, that's going to be September, October, November, December. 4 months. So 6175 divided by 12 multiplied by 4, 2058. 2011, we had a full year. 2013, a full year. Sorry, I've made a mistake there. We didn't have the machine in 2010. 2011, we bought the machine, so I just need to move these across one. There was nothing in 2010 because we didn't own it. It was 2058.3, so 2058, which was the 4 months in 2011, and we had a full year in 2012. So that adds up to 8233. And then this machine here, machine 3, was purchased on the 1st of the 1st, 2012. So 2010, we didn't have it. 2011, we didn't have it. 2012, the machine was bought on the 1st of January, so a full year's depreciation in 2012, 7125, gives us a total of 7125. So our total depreciation on the 1st of the 1st, 2013 would be 27,233. That is going to be our opening balance in the depreciation account. So our opening balances are going to be in the machine account 190,000, in the depreciation account 27,233. Now what I'm going to do, I'm going to go through the question and we're going to fill in the rest of this table with there were 2 disposals, disposal of machine number 1 and disposal of machine number 2. So we'll start with machine number 1. So reading from the question, machine number 1 was ruined by malfunction on the 1st of the 3rd, 2013. So the 1st of the 3rd, 2013. So depreciation in 2013 for machine 1 would be your annual depreciation divided by 12, and it would be multiplied by 2 because the machine was destroyed on the 1st of March. So we only had the machine January and February. So multiplied by 2. That would give me 791.67, so I'm going to put 792. We disposed of that machine then, obviously once it was destroyed. So the disposal, when you dispose of something, you must also dispose of its depreciation at that point. So at that point, we had accumulated depreciation up to the 1st of January, plus depreciation for the year. So that's going to be the 2 of these added together, 12,667. And the next year we have got rid of that machine. So obviously that's it for that machine. Machine number 2 in 2013. Well, machine number 2 wasn't disposed of until the 1st of the 4th, 2014. So depreciation for 2013 for machine 2 is just an annual depreciation of 6175. There was no disposal, so that's irrelevant. So accumulated depreciation on the 1st of the 1st, 2014 would be the 2013 figure plus 1 year's depreciation, 14,408. Then we know this machine 2 was disposed of on the 1st of April 2014, so that's 3 months. So in 2014 we're going to have 3 months depreciation, so it's 6175 divided by 12 multiplied by 3, 1544. So this machine was disposed of on the 1st of the 4th. As I said a minute ago, you must dispose of all depreciation up to that point. So that would be the accumulated depreciation of 14,408 plus the 3 months depreciation in 2014, which gives us 15951.75. I'm going to round that up to 15952, and that will be my disposal depreciation on machine 2. Machine 3, however, machine 3 we did not dispose of at all. So there is going to be, we still have machine 3. The yearly depreciation is 7125. So I'm just going to go to 2013 depreciation, 7125, no disposal. So the accumulated depreciation for 2014 would be accumulated depreciation for 2013 plus depreciation of 2013, which equals 7125 plus 7125. 2014, we still own the vehicle, so we'd have a full year's the machine, 7125. And there is no disposal in 2014. So that's all we need to know for that vehicle. And we don't need any of these totals. Now, we go to the modification for vehicle 3. So the modification was done on the 1st of the 1st, 2014. So obviously nothing in 2010, nothing in 2011, nothing in 2012, nothing in 2013, and nothing in 2013, nothing in disposal 2013. Accumulated depreciation 1st of the 1st 2014, we had nothing, we didn't have it, we only just bought it. So depreciation for 2014, we bought the modification, we paid for the modification on the 1st of the 1st, so we had a full year's depreciation in 2014. We are told depreciation is 475, so 475, and no disposal. Machine number 4, we bought on the 1st of March 2013. So again, 2010, 2011, 2012, nothing, nothing, nothing. Depreciation for 2013, however, we bought the machine on the 1st of the 3rd, so we would have that machine for 10 months. So this is 12 months, so it would be 5,700 divided by 12 multiplied by 10, 4,750. There was no disposal. The accumulated depreciation, well, there only is one depreciation, 4750. And then we would have a full year's depreciation in 2014 because we still hold the machine, 4750. Finally, machine number 5. We have a yearly depreciation of 5453. We didn't buy this machine until the 1st of the 4th, 2014. So, nothing in 2010, 11, 12, 13, nothing until we get to nothing at the beginning of 2014. We will only have depreciation for 2014. We bought the machine on the 1st of April. So, January, February, March doesn't count, so we would have 9 months worth of depreciation. So it would be the 5453 yearly depreciation, 5453 53 divided by 12 multiplied by 9, which gives us 4090 to the nearest decimal point. To the nearest whole number, sorry. So that's the numbers we need. What we need is a few totals. We need the total for accumulated depreciation at the beginning of the question. So we have vehicle 1, vehicle 2, and vehicle 3. So I already did that up there actually. I'm going to delete that and I'm going to put this in red. So 27233. We need depreciation figure for 2013. So we have vehicle 1, vehicle 2, vehicle 3, and we have vehicle 4 as well. So 18842. The disposal for vehicle 1 total, we have accumulated depreciation for the opening balance in 2014, which comes from vehicle 2, vehicle 3, and vehicle 4, 33408, and then depreciation in 2014, vehicle 2, vehicle 3, the modification, vehicle 4, and vehicle 5. 17984. I've gone wrong somewhere. Let me see. Oh yeah, I've got the wrong number here. Depreciation for 2014 should have been 5700. 5700, not the 4750, which I said is back here. The annual depreciation is 5700. So 18934, and then the disposal of vehicle number 2 is this number here. Okay, there's a lot of work in that, but now we have every single number that we need to finish the question and to fill in the 3T accounts, the machines account, the depreciation account, and the disposal account. So what we need to do, I'm going to go to these now. I'm going to have this table, I'm going to be taking the figures from this table. So we must, when we are doing this, we must have our dates and our details correct as well. So be very careful with your dates. So first thing I'm going to do is the opening balances. So the opening balance of motor vehicles is on the 1st of the 1st, 2013. The details opening balance, and that's coming from the calculations 190,000. The opening balance for depreciation, again, on the 1st of the 1st, 13. Details, opening balance, and again, if we go back to sheet 1, so it's the two things marked in red, 190,000 and 27,233. 27,233. Okay. So now we'll just go through the in order, in chronological order, so by date. So the first thing that happened was machine number 1 was ruined by a malfunction on the 1st of the 3rd, 2013. So on the 1st of the 3rd, 13, the detail would be disposal of number 1, machine number 1, and machine number 1 cost €50,000. So when we credit the motor vehicles account, we must debit the disposal account. So again, 1st of the 3rd, 13, details, machine 1, and the figure 50,000. Okay, when you dispose of anything, you must also dispose of its depreciation up to that point. So if we go back to sheet 1, we look at the disposal in 2013 of vehicle 1. The depreciation was 12,667. So on the debit side of depreciation, we have the 1st of the 3rd 13 disposal, and it is 12,667. Now I'm just going to make this slightly smaller so it fits into the page. 12,667. Okay. I'll undo that. So if we debit depreciation, we must credit disposal. Credit disposal of, again, date 1st of the 3rd 2013. Call it depreciation, 12,667. Now, looking back at the question, with machine number 1, there was also 25,000 for insurance and €500 received from the sale of the machine to a scrap dealer. So what would happen? That would also go in. So the scrap allowance. So same date, 1st of the 3rd 2013, and 1st of the 3rd 2013, we would have allowance, and you would have scrap. So the allowance was 25,000, and the scrap figure was €500. So that deals with vehicle number 1, the disposal of vehicle number 1. Okay. When we sold vehicle number 1, go back up to the motor vehicles on the same date, so on the 1st of the 3rd 13, we also bought vehicle 4, and that cost us €60,000. So I'm looking back here, and I'm looking at €60,000 was bought on the 1st of the 3rd 2013. €60,000. So we'll go back here. So a couple of things I have to do now. We also have our depreciation for 2013. If we go back to sheet 1, depreciation for 2013 is 18,842. So on this side, and that would be the end of the year, 31st of the 12th 13, that would be our P&L depreciation, and the figure would be, I'll move across here, the figure would be 18,842. All these figures coming from our workings. So that, as far as I can see, is everything that happened in 2013. So we have to work out, did we make a profit or a loss when we got rid of this machine? We need to balance off the motor vehicles, see what's going into 2014, and do the same with depreciation. So I'll deal with the motor vehicles first. So we would add up both sides and find out which side is bigger. Clearly this side is bigger, so 190,000 plus 60,000, so 250,000 goes on both sides. So we're going to find the balance above the small side. So on the 31st of the 12th 13, we would have a balance up here of the 250 minus the 50, 200,000. So this 200,000 now, okay, I'm going to move this up one. This up one here. This one up here as well. So our balance would be here. I'm going to skip a line, and the opening balance for 2014, so the 1st of the 4th 2014 opening balance would be 200,000. I must change this to 200,000. So So our opening balance for 2014 will now be 200,000. We do the same with the depreciation account. We must find the balance here. So on the 31st of the 12th, 13, we would have a balance. So again, we add up both sides, whichever side is bigger. So clearly this side is bigger, and that number is going to go on both sides. So 46,075. The balance equals the difference between this 46,075 and 12,667, 33,408 euro. So I'll miss a line. That will be the opening balance on the 1st of the 1st, 2014. That will be your opening balance in the depreciation account. So 33,408. So just do a few lines here to tidy it up. You have to keep things tidy in this question. Make sure the corrector knows what you're doing date wise. Okay, so far we have the 2014 opening balance for motor vehicles, the 2014 opening balance for depreciation. With the disposal account, what we do here, again, we balance this account to find out did we make a profit or a loss on the disposal, and then we will start from scratch in 2014. There'll be no balance carried down. So again, what we do, we add up both sides and we find out whichever side is bigger. Now I know that this side is bigger, so we're going to put 50,000 on both sides. 50,000 and 50,000. So the balance must go here. So the balance is called profit and loss in this case. So it's the difference between the big number and the small number. So 50,000 minus 500 minus 25,000 minus 12,667, 11,833 is the figure on the credit side. So what that would be, that would actually be a loss. If I just explain, the machine cost 50,000. If we depreciated that machine by 12,667, so 50,000 minus 12,667, the machine was worth 37,000. That's how much the machine was worth. They gave us an allowance of 25,000 and scrap value of 500. Now the machine was destroyed, so we ended up making a loss on that machine of 11,833 euro. Okay, now let's do 2014. So again, there was one disposal in 2014, which was machine number 2. Okay, so machine number 2. So back up to motor vehicles. Machine number 2 was disposed of on the 1st of April. So 1st of the 4th, 14, disposal of number 2, and number 2 cost 65,000. Okay, we have credited motor vehicles. We must now do a new debit in the disposal. So miss a line and call it the 1st of the 4th, 14, machine 2, 65,000. Okay, and again, so that's our 65,000 credit, 65,000 debit. When you dispose of anything, you must dispose of its depreciation. So we go up to the depreciation account. First, on the debit side, 1st of the 4th, 14, machine 2, and the depreciation, if we go back to our workings and we look at 2014 disposal, machine 2, 15,952. 15,952. So 15,952 debited in the depreciation, therefore credited in the disposal account. 1st of the 4th, 2014. Again, we will call it depreciation of 15,952. If we look at the question to see was there any trade-in allowance, so machine number 2 was traded in for 27,500. 27,500 was the trade-in allowance. So let's have a look back at our here. So in the disposal account, we would put 1st of the 4th 2014 allowance of 27,500. 27,500. From there, I'm going to go up to the machine account. So we disposed of machine number 2. So we disposed of machine number 2 and we bought a new machine costing 55,000. 55,000. But it cost 2,000, remember, to have the machine delivered and 400 to have it installed. So and we also, sorry, I missed that there, we also had a new machine was bought in 2014, modifications were carried out on machine 3 which cost 4,000. So in the machines account, machines, so I'm going to change that, machines. So in the machines on the 1st of the 1st 14 there was a modification. We'll call this bank because that's where it would have been paid from, of 4,000. And on the 1st of the 4th 14 from the bank was 57,400 for machine number 5. Number 5. So on the 1st of the 4th we disposed of 65,000, we bought 57,400. So when you dispose of something, we have done depreciation and everything. So that's everything for that disposal. What we have to do is find the balance again to see did we make a profit or a loss on disposal. So if we add up both sides, the big number goes on both sides. In this case the big number is 65,000. The balance would end up going on this side again, 31st of the 12th 2014 this time. Call it P&L, and that is 21,548, and again that would be a loss of that amount. That is a loss. So that's a disposal dealt with. What we have to do is we have to balance the machine account to find out what we have. So again, add up both sides. I know this side is going to be bigger, I can see that. So 261,400 goes on both sides. 261,400. Now we don't need to do a balance brought down because we're not going into another year, so we just do a 31st of the 12th 2014. The balance is going to be the difference between 261,400 minus 65,000, which is 196,400. Then finally, over to our depreciation account. Again, for 2014, so the 31st of the 12th, 2014, we would have the year's depreciation, profit and loss depreciation. So if we go to our workings, in 2014 we had 18,934. There's a depreciation for 2014. 18,934. So again, add up both sides. It's clear that the credit side is bigger. So the big number goes on both sides, and the balance on the 31st of the 12th, 2014 will be the difference between the two, 52,342 minus 15,952, 36,390. That's your T accounts done for 52 marks, I believe it was, in this question. So if we look at the answer, you're asked to do the machinery account, the provision for depreciation, and the machinery disposal, and then there's a bit of theory. Why does a company charge depreciation, and list the factors which should be considered when determining the depreciation. So let's have a look at the answers. So you can see from the machinery account here, I'm going to change to red pen. We have this done. So there's 1 mark going for your opening balance, 1 mark for your disposal of number 1, 1 mark for purchasing number 4. Then there's 1 mark for disposal of number 2, 1 mark for the 4,000, and 1 mark for 57,400. The depreciation is where the real marks come from here. So you can see your dates are getting you 2 marks. You must have your dates correct. Big marks here now for these depreciation figures. So your opening balance over here, your depreciation on the disposal of number 1, and then your profit and loss figure. Similarly, your disposal depreciation of number 2, your profit and loss balance is worth 8 marks in this case, and your balance is worth 4. So that's worth, what is it, 13, 21, 25, 27, 30, 32 marks for that. And all those figures, remember, are coming from the workings. They're all there in the workings. So that's why the workings are so important. Then our disposal figures. Again, these aren't worth as much marks. There are 2, 4, 6, 8, 10, 12, 14 marks here. But again, machine number 1, that's the cost figure. Machine number 2, that's the cost figure. The insurance figure we're given, the scrap allowance figure we're given. The depreciation we worked out in our depreciation, it's up here. And the profit and loss figure is the balancing figure. Similarly, trade-in allowance, depreciation of 15,952 is up here as well, and the balancing figure. So that's it for 52 marks. Have a quick look at the depreciation. The question was, explain why a company charges depreciation and list the factors when determining the depreciation policy. So, why does a company charge depreciation? Because depreciation is an expense. You may remember this, or you may have read this. Depreciation is an expense. 1 mark. Depreciation is charged so as to write off the cost of a fixed asset over its useful economic life. Next mark. Failure to include depreciation in the final accounts will result in the profit being overstated and the net worth being overstated in the balance sheet. So this will not show a true and fair value, which is what we want in accounting. The factors to be considered when accounting for depreciation are: what's the type of asset, what's the estimated life of the asset, what's the cost of the asset, is there a scrap value at the end of the life, and what's the method of depreciation, whether that be straight line depreciation or reducing balance depreciation. So that's it for that question. As I said, it should take you 25 minutes. I've gone through it very slowly, so hopefully this will help. So give it a watch.